Good morning. I'm David Schwimmer, the CEO of LSEG, London Stock Exchange Group, and it's a pleasure to be here this morning at the Green Horizon Summit. I am joined by Annette Mosman, the CEO of APG Group, which is one of the world's leading pension funds, over 600 billion euros of assets under management, 4.7 million members, most of whom are Netherlands government employees. And we are going to have a good discussion this morning. We have the CEO of one of the world's leading pension funds. I'm the CEO of one of the world's leading financial market infrastructure and data providers, where we have both the London Stock Exchange, which is a leading issuance venue for green finance, sustainable finance, and of course, Annette at APG Group, a huge role to play in the sustainable transition here. So plenty for us to talk about. Why don't we dive right in? And Annette, if I can ask you, COP26, I think a long time coming, if I can put it that way, and a lot of anticipation, some hype, frankly, some cynicism out there. What are your thoughts now that we're actually here?
Good day, David, and all attendants here. Well, first of all, I'm in the Netherlands, so unfortunately I can't be with you in Glasgow. But I'm excited that the COP is there finally after 1 year of delay. And for me, the most important thing is, and I really hope for a strong and supportive signal that the world can build on after this COP. So I really hope there will be a good outcome of which we as an investor, but also the corporates in which we invest, can build on. So that's my hope. But I'm not sure, how is it? How does it feel up there being in Glasgow?
Well, I think one thing I would say, I was just listening to Sandy Boss in the prior panel. There is a lot of early discussion around putting pricing on carbon as just a key next step. I think there's a sense of optimism. There's a sense, personally I feel a sense of optimism, but also there's a sense that we have a daunting task ahead of us. This is a huge job and a huge transition that the global economy has to make. So I think it's kind of that mix of optimism and a sense that, wow, we've actually made a lot of progress, but that there's so much more to do. So we will see. I would say, it also does feel different what a key role finance is expected to play. And that does seem to be a bit of a turning point with this COP relative to those in the past. But any thoughts on that?
Oh, I think the subject, not only the role the financials are playing, but the subject as a whole, a responsible investment, is top of mind in the Netherlands and in the whole of the world, luckily. It's top of mind of our clients, the 8 pension funds for which we work for, and also the pension fund industry in general. So yes, I think there is a momentum at this time. And this momentum is driven, and that's maybe more important, by the engaged participants of the funds on this topic in the Netherlands, but also from our regulator, who's now actively asking from the pension funds what they are doing on responsible investing. So basically, responsible investment is a must for Dutch institutional members, and not only a gadget, which maybe it used to be a long time ago.
Yeah.
So yeah, the momentum is there. And from your side?
Well, it does feel very different in that there is a real sense that finance has a role to play. And the need to mobilize finance given the scale of the challenge that we have. Again, in the few sessions I've listened to or been in this morning, many different speakers are throwing around the trillions of investment capital that is necessary to make this transition. And I think that in many ways, this is the COP where finance has really a mainstream role to play. ESG and sustainable investment has very much gone mainstream. And it makes sense because of the need for capital. The requirement for capital to really fund the transition that we're going through, to fund the clean tech that is necessary. It's not going to happen without the private sector. The private sector is really the only way that we're going to be able to mobilize the amount of capital. It's the only way that we're going to be able to move quickly enough, because we do have to do more and we have to do it faster. So I think the fact that there's a finance day, a day dedicated to the mobilization of capital here, is a critically important recognition of that role. And then maybe the last thing I would just say on this is that it does seem as if the finance sector gets it, really broadly defined, whether that's asset owners or asset managers like you, whether it's the retail community, whether it's issuers, and to a certain extent, governments and policymakers. So there is a lot of engagement. We conducted a survey through our FTSE Russell Index business of leading asset owners and leading asset managers around the world. 4 out of 5 of them on a global basis are very much focused on this and very much engaged in this. That does still leave 1 out of 5 that has to get with the program, but that does give us a sense of how much focus and how much engagement there is on this, and we've really seen that that unity of purpose, if I may describe it that way, in the context of the finance sector. In that context, the APG has really been a pioneer in this area broadly, and I'd love to understand the philosophy that you have in terms of your investment strategy with respect to climate issues. You're a universal investor. Is that what drives the philosophy? Is it about risk versus return? Is it about your member preferences? How do you think about it?
Of course, it's a mix of all, but our strategy as asset management strategy has been for a long time to be a leading long-term responsible investor. And where does that come from? As you already mentioned a few items, but I think the most important thing is, who do we work for? We have 600 billion assets under management, and those come from 4.7 million Dutch participants. So our goal is to realize a good pension for that approximately 4.7 million households in the Netherlands. And of course, providing good pension has a financial element. Achieving the highest risk-adjusted returns is and remains important. But the other thing about that is, which is in our strategy, is that we believe that a good pension is best to be spent and enjoyed in a livable world. And it's hard, if you look at the Dutch situation, we are under sea level, a big part of it. So it's hard to enjoy your pension when your house is flooded, for example, as a result of the rising sea level, and which is caused by climate change. So that's one angle. It's our purpose and why, for which we are working for. So given the profile of our clients, the pension funds, the long-term time horizon of investment, and the fact that indeed our clients basically have the entire real economy on their balance sheet, which makes us a universal asset manager, it's very natural for us to take systematically important issues such as climate change into account in our investment strategy. That's why climate change has been a focus for us for quite some time. We already started in 2013, so almost more than 10 years, when we calculated the carbon footprint of our asset management, of our listed equity portfolio in that case. And earlier this year, we formally made a commitment to achieve a net zero portfolio by 2050. We have done this by signing up to the Net Zero Asset Manager initiatives, which you are pretty familiar with. As such, we are committed to ensure that we offer investment propositions to our customers that both have excellent risk return and also are consistent with the net zero emission ambition we have. So it's a mix of all these items which makes us to have the strategy of being a long-term leading responsible investment company. And
if you touched on the issue or the opportunity to engage with the companies that you invest in. Let's talk about that kind of collaboration for a moment. You're a member of Climate Action 100 Plus, where you engage with the world's largest emitters. How do you engage with them? And I should also ask, how do you engage with policymakers? Because they have a critical role to play here as well.
Yeah, I fully agree on that one. Well, indeed, we are active in the Climate Action 100 Plus Engagement Initiative. And engagement is one of our main pillars of the strategy to address the point of climate change. Few companies we all know that not all companies are fully aligned with the Paris Agreement of the last COP. So we aim to use engagement, so that's our goal, as a tool to push companies to take action, but also to understand what their challenges and barriers are. So it's not only pushing, but also understanding what the challenges and barriers are. We find that engagement with corporates is also most effective if this is combined with engagement with policymakers and standard setters, exactly on those systematic issues that are barriers to take actions by these corporates. So also we have been active on that field with respect to policymaker engagement, calling for an effective, and here he is, I think you mentioned it at the beginning of the session, an effective CO2 pricing, and calling upon government also to end construction of new coal-fired power generation capacity and phase out existing coal power. So we are active on both fields. And today, being at the COP in Glasgow, maybe I should highlight the last one, the importance of also governments to engage and to take this next step, which is necessary and which helps us. Mm-hmm. Maybe two small examples how we do it. We have asked the Dutch government, we have called upon them to come with the CO2 price. We did that several times. And in a global perspective, we recently called upon the South Korean government to step on with its climate ambitions and phase out coal power generation. So two small examples how we try to do it and engage also with policy setters.
It's somewhat similar for us. We engage.
Yeah, maybe.
Yeah, we engage regularly, whether it's through the exchange, London Stock Exchange, with issuers and helping them with sustainable finance or green finance. We have a green economy mark that recognizes companies that have more than 50% of their revenues associated with the green economy. We work closely with corporates through our index business. As they are trying to understand how they are evaluated and how they can be included in our sustainable index products, as opposed to in the regular index products or in the regular market. And in some ways, we've seen corporates really sign on to that and be very focused on that, very engaged in that. But then there are others who are not quite there yet. And so that is a continuing engagement and an ongoing dialogue. I must say, though, there is, for some of our issuer group, our issuers, there's some confusion. There has been a lot of noise. They get a lot of requests to disclose on different standards, disclose in different ways from lots of different organizations that put out different kinds of ratings. So there is a healthy amount of confusion out there. I think one of the opportunities that we have coming out of this with the work that GFANS is doing, with the work with TCFD, with the work of the IFRS Foundation, we're coming to a place where we have, as the fog starts to clear, I'll say, we are starting to see an architecture for really understanding sustainable finance and having some agreement around taxonomies, having some agreement around disclosure standards with TCFD. So some progress being made there. But I think, again, plenty more work to be done. So.
Yeah, Mark, but when do you expect? We talked about the mainstream, that's getting more and more, responsible investing is getting more and more mainstream. Maybe we are at a momentum at this time. But if you look at the indices, when do you expect that it will be a green or climate adjusted index will be the default?
Yeah,
as opposed to, well, the more brown indices we have?
it's a great question. We are already working on that, in fact. So with pretty much all of our benchmark index products, we have a climate-adjusted version or a sustainable version of those. I think it's important to maintain I'll call them the regular benchmarks and the regular index so that we know what we're measuring the sustainable indices against. Because again, I'll call them the regular or the legacy index products, they capture the broader market and they capture that full market. So it's important to have the sustainable index relative to that regular index so that we can measure that delta, we can measure that difference. But it is, just to come back to your comment on the mainstreaming, I'll just share with you one statistic. Year to date, we have seen about 1% of the capital raised on the London Stock Exchange for fossil fuel associated companies. We have seen 11% of the capital raised associated with sustainable finance or green finance. So that just gives you a sense of the dramatic change that we're seeing in terms of where capital is being allocated. So it is a pretty dramatic distinction, and I would not have been able to say that a year or 2 or 3 years ago. Another question for you, though, how do, again, coming back a little bit to the Climate Action 100 Plus, how is collaborative engagement really the answer here, with Climate Action 100 Plus being a collaborative effort from many different institutions? Do we have I'll call it a power of the pack in terms of changing the dynamic here? It's such a big issue that you can't do it by yourself, but is that working in terms of the collaborative engagement that you and others are involved in?
Yes, I think the collaborative engagement is very powerful. And well, as you said, this is not only a big problem, but it's a complex problem, as you also sorted out. So that means not one party, being the financial, the corporates, or governments, can solve it. So we need to work together. So that's why I'm very enthusiastic about the collaborative engagement. And I think it's powerful, because size matters, and having a common engagement agenda and common route to go to and expectations towards corporates helps us as an investor company, but also the corporates, because it's clear what is expected from them. So, and Climate Action 100 Plus also helps measuring progress, which is you know where to go to and how to measure the progress, and producing data through the Net Zero Company Benchmark. So this benchmark leverages the insight from TPI. And finally, I think the Climate Action 100 Plus is helpful, as it is starting to create sector strategies. Also here, we can't solve it alone, and corporate can't solve it alone. It needs to be on a sector level, addressing sector issues and common themes at a higher level to maximize the impact we want to have. So altogether, this helps, in my view, in our view, the impact of collective initiatives such as Climate Actions 100 Plus. So I'm very enthusiastic about this one. So, but this clearly a route that you also have been taken, given your involvement in the TPI, in the Transition Pathway Initiative, and your stance on climate reporting via the TCFD, isn't it?
Yeah, it's in many ways it's the same dynamic that you were just talking about, in that we can't do this alone. It's a massive global challenge. So we have looked for the areas where we think there are standard setters or frameworks or taxonomies that we think are going to be able to have the ability to scale globally. And so you're absolutely right. We have backed TPI, the Transition Pathway Initiative. We think that is a perfect example of this. It has scale, it's independent, it's free, and it's open to anyone. And it works closely with Climate Action 100 Plus. So it is squarely within this zone of collaborative and has the opportunity to scale globally. That's why we recently have announced that we're helping to fund TPI in terms of the TPI Global Climate Transition Center in partnership with the London School of Economics. And that will enable TPI to continue this scaling up. I think today TPI provides ratings of about 400 companies, and with the Global Climate Transition Center, TPI will be able to scale up to covering ratings on 10,000 plus companies, on private companies, on sovereigns, fixed income. So big opportunity here. You also touched on TCFD, and disclosure is such a critical element of getting this right, to have the appropriate framework for disclosure, to have some consistency, some standards around disclosure. And TCFD does, I think, a very good job of that, and really is becoming accepted as the global standard in terms of helping companies think about their climate exposure, in terms of their governance, their strategy, their risk management, what metrics they use. So we're very supportive of that, and we've worked with exchanges around the world to try to implement model guidance using TCFD, so that issuers, as they go to an exchange to raise capital, we will have this common standard, this common usage of TCFD. And I think that's another important element in terms of trying to have global standardization and global scale. We're getting a little close on time here, and there's one question I definitely wanted to ask you about, which is the dynamic between engagement and disinvestment. And obviously some big news for you all last week with ABP, your largest client, making an announcement. Maybe I'll let you describe the announcement they made, and then the impact that it has or could have on you, and what you think the broader ramifications are.
Yeah, well, I just, first I talked about we have been for a long time a leading responsible investor, but there is a new mainstream, and we also said within ABG, and also our clients are saying we need to have a step up. And when you talk about a step up, what does it mean? That's in the area what you just said, engagement versus disinvestment. What we did in the past is what we did engage a lot, but we didn't disinvest when corporates didn't have the pace they agreed upon, or are not matching the Paris Agreement. So this is an example of one of our funds, ABP, which announced last week that they are divesting the coming year from producers of fossil fuels, so coal, oil, and gas. This decision has been made by ABP in light of the recent reports of IEA, I should say, and IPCC, calling for an accelerated transition, which we really do need. So there's a broad support among pension participants and employers of ABP for this decision. And ABP sees other opportunities. They see insufficient, now it's a difficult English word, insufficient opportunity as a shareholder to push the necessary and a significant acceleration with respect to fossil fuel products. But we do see engagement efforts influencing the bulk users of energy, so the demand side here. So what was the announcement? To stop, to divest from fossil fuels, and to invest much more on the demand side and influencing the bulk use of energy. So that's the biggest, that was a big step. And what you also saw in the Netherlands, it was a notable announcement, and not everybody agreed. So it is about when do you stop engagement and when do you divest, and that's a balancing act. But the good thing, I think there was a lot of discussion in the Netherlands about this, and it also gave a push to the discussion on climate, and that acceleration is needed at this moment. So,
yeah, I actually think this issue and the issue for big carbon emitters to go through a transition is probably the toughest issue in the context of a lot of tough issues. We cannot, the world is, of course, still dependent on fossil fuels for something more than 80% of our energy. And so we cannot just shut this off. And it's absolutely critical that the big energy providers today are able to transition. And part of a transition is funding that transition. So we have a strong view that we cannot demonize these companies if they are working towards a transition, and we have to help finance them if they are working towards a transition. And again, very tricky issue, but it's one thing that we continue to be focused on at LSEG and on the London Stock Exchange with a transition bond segment and with various transition financing alternatives. Annette, we have about a minute left, so I will just turn it over to you to see if you have any final thoughts or hopes for COP26 or a wish list, if I may put it that way.
Yeah, we touched upon the point, my final message during this session, but I think it's about a combination of action and announcements by policymakers, investors, and corporate. Only together we can deal with this enormous climate change complexity. So we have made a commitment to achieve net zero emissions, but it will be increasingly harder for us as an investor to allocate the funds in line with achieving net zero emissions if the supporting policy environment is lacking. So that's my hope. We sincerely hope that this COP will bring a clear message, as I said, from governments that will push everyone towards a low carbon future. We are on board. We hope you are on board, We hope for your support in that.
Well, Annette, thank you. I could not agree with you more. And great to see you again. Look forward to seeing you in person. Thanks for joining me this morning.